Welcome to Lyra. Hi, I'm Chamindarangal and I'm excited to have you here. My primary aim is to help uplift you in the world of stock trading. I will sharing the knowledge I gained from my university studies along with the practical experience I have earned from work in stock market. My goal is to break down complex concepts and present them in very simplistic and easy to understand way so you can grow your skills and confidence in trading. Let's get started into the project. Please keep your attention focused until the end of the video as I will walk you through actual market transactions which will make it easy for you to understand. Today, we will be exploring the high profitable awesome oscillator strategy in depth and how it works in conjunction with price action. Stay with me till the end of the video. Take notes, do your paperwork and watch carefully. By the end, you will know how to identify the best time to enter and exit the trade. Let's take a moment to honor Bill Williams, who introduced this concept in 1990. The other thing, since price action is relatively consistent across different assets, this strategy can be applied to currency trading, stock trading, crypto and other markets. Now let's get into the depth of the topic. I am mainly focused on stock trading. What is the Awesome Oscillator? The Awesome Oscillator is a crucial indicator in investment decision making. It helps us to measure market momentum in any time frame. This indicator is calculated by taking difference between the 34 period simple moving average and the 5 period simple moving average. In practice, the Awesome Oscillator displays as a series of green and red bars oscillating between plus 100 and minus 100, positioned above and below the zero line. When the bars are above the zero line, it indicates a bullish momentum, and when the bars are below zero line, it indicates a bearish momentum. The Awesome Oscillator consists of zero line, histogram above zero line, histogram below zero line. When a series of green and red bars above the zero line, it indicates a bullish momentum, and also in a series of green and red bars below the zero line indicates a bearish momentum. Now let's jump into the practical chart to see how work it in action. Now I am taking you one step ahead in this initial point. I am taking simple moving average to the chart. Sometimes the simple moving average, the word may be new to you. If you are a beginner, don't worry. I will discuss these topics in later videos to make you some amount of a clear. I am taking simple moving average. Simple moving average line 5. I take black, and simple moving average 34 is in red. When simple moving average 5 cross over the 34 line and stays, in that time you can see on the Awesome Oscillator the histograms are above the zero line, and other hand you can see when the 5 simple moving average is below the 34, you can see in the Awesome Oscillator the histograms are under or below the zero line. And when we compare the SMA, that means simple moving average cross points with the zero line cross on the Awesome Oscillator, you will notice these points align, helping you to understand the strategy. The strategy is this: in the points of simple moving average 5 and 34, the same points you can see the cross points of the Awesome Oscillator. Now let's get into the other topics, that means for the strategies of this Awesome Oscillator. There are three primary strategies in using this Awesome Oscillator. 1. Saucer strategy. 2. Twin peak strategy. 3. Zero line cross strategy. Now I am taking most popular three strategies of Awesome Oscillator one by one. As the first, I am taking saucer strategy. The saucer strategy is used to identify a pure momentum for a continuous trend. Now I am taking a chart of the actual market. Now you can see histograms above the zero line. For a buying signal, the following conditions has to be fulfilled. The first one, the Awesome Oscillator histogram is to be above the zero line as I showed you in that chart. Second, you see two consecutive red bars. 3. The second red bar is shorter than the first one. I clearly mention in this chart by arrows. The first is red histogram. Second red histogram is shorter than the first one. You see the arrows. The third is a green histogram, and third is also green. The fourth green bar marks the start of an uptrend in price chart. If all the above conditions met, buy at the open of the fourth green bar. To make that strategy, I am taking actual market chart. Now you can see I have highlighted by arrows where these conditions are fulfilling. In this chart, there are two. First is a red bar, second red bar, the shorter, and a green bar, and fourth green bar. You can see a nice uptrend can earn much money. Right. On the second one also, red bar, second red bar is shorter, and a green bar, and fourth. Now at the opening of this green bar, we can place our buying orders. Now I am taking you to the second phase of the saucer strategy. This strategy is very useful for us to identify the selling points. To that, we have to satisfy 5 conditions. As the first one, Awesome Oscillator histogram is need to be below the zero line. Now I take an example chart. You can see it now. Now I think you understood. Here the histogram is below the zero line. Now I am again taking you to up. As the second condition, need to have 2 consecutive green bars, and the second green bar is shorter than the first one. Third bar is red, and fourth bar is also need to be red. If all these conditions are met, sell at the fourth red bar opening. For your reference, I am taking a horizontal chart. It will make it you very clear. Now here, first green histogram. 2. The second green histogram is shorter than the first one. Very clear. The third is a red bar, and fourth is also red, and this is the point to open a selling point. Now I am taking a sample chart for you to identify the selling point. Now in this practical chart, I am taking actual chart of a market. Now here you can see the histograms are under the zero line. I make a square for you more to understand. Green bar, and the second green bar is shorter, third is a red bar, and fourth is a red bar. At the open, and I have highlighted by an arrow to the price chart, where you to place your sales or exit. In other words, the short, market short. So, if these 5 conditions are fulfilled, you can place the selling order. Now I am taking the second strategy of the Awesome Oscillator. This strategy is little complicated. This strategy is twin peak strategy. The twin peak is also considered a contrarian strategy, meaning short positions are entered when the indicator is above the zero line, sell signals, and long positions are entered when the indicator is below the zero line, buying signals. The twin peak method involves identifying the difference between two peaks on the same side of the zero line, and there are few conditions to be completed to get the benefit of that. Now I am taking you to the second stage, that is second strategy, twin peak. For a buying signal, the following conditions has to be fulfilled. 1. There must be two peaks below the zero line. 2. The second peak is higher than the first. 3. Green bars follow the second peak. 3. The vertical distance between the zero line and the highest point between the two bottoms must remain below the zero line for the entire time. If these conditions are fulfilled, you can easily get a buying decisions. A perfect decision it will be. Now, for more understanding, I am taking actual market conditions one by one. For more understanding, I took this chart and I highlighted by a square the two peaks, and in these two peaks there is two bottoms, one bottom, the first bottom and second bottom. Second bottom is higher, and mid of these bottoms there is a mountain, the highest point that is below the zero line for the entire time, right? And in the second peak, the second bottom, it follows after the red bars, the green bars are continuation. This is the condition, right? Now it is fulfilled. Now I am taking you to our next chart. I have highlighted the perfect buying point using these two twin peaks under the zero line. This is the perfect buying point. To make you more comfortable in understanding, as this is little complicated strategy, the twin peak first phase for the buying decisions, I am taking another sample chart of actual market. Now here you can see the first condition, two peaks below the zero line. In other words, two bottoms below the zero line, and second bottom is higher than the first one, followed by green bars. Now we can make the decision. First green bar highlighted by arrow to the price chart, and this is the point where you to buy. Now if you place order in this level, you can see a very good uptrend and you can get high benefit by using this chart strategy. And I take you to another sample. Here it's very clear. Now there are two peaks below the zero line. To the first one, second is short higher and continued followed by green bars, and I place the arrow to the price chart where you to make the decision on buying. Now you can understand this is a good version to place your order, as every strategy is having two aspects, a buying part and selling part. Now we are going to discuss the selling part, bearish twin peak strategy. For that, you have to see several conditions need to be fulfilled. First condition, there must be two peaks above the zero line. Second peak is lower than the first one. After the second peak, red bars follows. The vertical distance between the zero line and the lowest point, the valley, called valley, between 2 points must remain above the zero line for the entire duration. That are the conditions. If this is actually this is little complicated, but understanding is in a correct manner, you can do marvelous things in the market. Now I am taking some other charts to make you more clear. Now here, this is actual chart in the market. Now you can see very clearly one first peak here and second peak is shorter and a continuation of red bars. At the first red point, I place the arrow up to the price chart. Now on the price chart, you can identify the perfect point to make the selling order, right? This is actual chart. So this is actual thing. So our presentation is very understandable for you to do a good decisions. This is the point to do the best selling. Now see the trend coming down, down. If you lose that decision there, you will lose them in the market. So I take some other point chart. Now in this chart, this is also a practical chart, actual chart in the market. Now here two bottoms, one as all the conditions as I mentioned earlier is fulfilled. Now see what happened. The first one, placed my order here. First spread, I saved. If I lose this point, what will happen? I lose my money. These charts do a marvelous thing when you are identifying perfectly the conditions. Now I am taking the third strategy of Awesome Oscillator, zero line cross strategy. The zero line cross strategy helps us in two ways. One, keep us out of volatile market, where the price of an asset fluctuates in small unpredictable swings, mean market without clear trend. 2. Allows us to benefit early without waiting for confirmation of a break of the zero line. Awesome Oscillator zero line cross identifies the following steps. Now I am taking The third strategy, zero line cross strategy of the Awesome Oscillator. That is a very helpful strategy for us. Now, for a buying decision, the Awesome Oscillator must show two swing highs above the zero line. Second, the second swing high should be shorter than the first one, creating a sloping line. Draw a trend line connecting the swing high extending through the zero line. Keep your focus on the exact point in the chart where you can benefit before the sloping line crosses the zero line. Now I am taking actual chart in the market. You can see there are two peaks. Second is shorter than the first one, and before it crossed the trend line, I join in these two peaks. That means a sloping line. Before it crossed the zero line, I can identify some green bars where the first point this sloping line crossing. At the first point, this sloping line crosses the green histogram. That is the point. At that point, I have highlighted arrows up to the market price chart. You can see the exact point where you can get a very good benefit. That means the high uptrend where you can get benefited. Now, for more clearance, I am taking a second chart. Now, in this chart, it's very clear. There are two peaks above the zero line, first peak and the second peak. First peak is very high than the second one, mean the second is shorter, and I can put a sloping line to the zero line cross. Before that sloping line cross the zero line, you can see very clearly. You can see a point where the green bars, green histograms are cutting by this sloping line. In that point, straightly I have drawn an arrow to the price chart. At that point, I can start the purchasing. Now again a chart is also the same. To the first peak, second is very short, and it cuts a green bars before cutting the zero line. At that point, I highlight by arrow to the price chart where a point you to purchase. Then, if you purchase, if you do the decision at the point, you will benefit it. As I told you earlier, this strategy, zero line cross strategy, is also having another aspect, that is the opposite pattern. To that, few conditions need to be fulfilled. The Awesome Oscillator shows two swing lows below the zero line. It's a must. 2. The second swing is higher than the first. 3rd, you will look for a similar trend line to draw through the two swing lows, identifying a potential short entry before the sloping line cross the zero line. Now, it's very clear in this chart we have taken. There is one bottom and another bottom. In other words, two peaks upside down. Now, this first bottom is the second bottom is higher than the first one. Adjoining these two bottoms, a slight line, uptrend line is marked up to the zero line. Now, before this uptrend line cross the zero line, we can get a point where the red bars are cutting. That is the point. First point is the point where to start the selling point. So we have to do the best sell decision at this point. For your understanding, I put an arrow highlighting the exact point where you have to place the selling order. I am taking actual price patterns for more benefits. Now, this is a perfect version for a bearish setup. Actual market. Now, here, second peak is higher than the first one, and I put a line joining the two peaks until cross the zero line. Before that point, I can identify a point where the red bars are cutting. As the first point of the red bars are cutting, I put an arrow to the price chart where me to make the decision to sell. Building on the strategies we have discussed so far, I am excited to guide you to more advanced level, helping you to achieve even greater accuracy in your trades. With the knowledge you have already gained, you are well prepared to take on this next step. Consider it part of your homework to prepare for what's ahead. The Awesome Oscillator is a powerful momentum indicator. Like other momentum indicators, it performs exceptionally well during rallies and distribution phases. However, in ranging markets, it can often generate false signals. In future videos, we will explore how to combine Awesome Oscillator with other key indicators like exponential moving average, the relative strength index, RSI, and the MACD for more powerful and reliable trading strategies. In our very next video, we will dive deeper into the RSI, laying the foundation for integrating these indicators effectively. Stay tuned. Our team has worked hard to create this video, and we hope you gain valuable insights into the Awesome Oscillator. A truly remarkable tool for traders, we are confident that it will help you make smarter, more informed trading decisions. If you found this content helpful, please give it a thumbs up. Subscribe to our channel and hit the bell icon to stay updated with our latest videos. Thank you for watching our video.